Hey everyone, it is Julie here with TipRanks, and today we're taking a look at Strong Buy Dividend Stocks for the month of March. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. The month of February has flown by and we're headed into March at the end of this week. So today we're taking a look at 6 Strong Buy Dividend stocks for March. Now all of these dividend companies have ex-dividend dates in the first couple of weeks of this next month. That is the date that you have to own a stock before in order to be eligible for that next dividend payment. So it's good to be aware of these dates so you're not stuck around waiting for another quarter for that dividend payment. We're going to take a look at these companies, what it is that they do, and of course what Wall Street is predicting for the stock's future as well. You can follow along over on TipRanks.com or by downloading the TipRanks mobile app using the links in the description down below. Now let's get right into our 6 dividend stocks for March. We're going to kick things off with a couple of energy companies, the first one being Viper Energy. They engage in the acquisition of oil and natural gas properties. Trading under the ticker VNOM, they're currently priced just above $30 per share. The stock has gained 26% in the past year, including growth of 16% in the last 3 months. Their ex-dividend date is coming up soon at the start of next week on March 4th. And the company has a payment date of March 12th for their quarterly dividend, which is currently at 56 cents per share. This gives them a current dividend yield of 4.9%, and they have a payout ratio of 64%. This follows their recent earnings report that came out on February 20th, where the company did have an earnings beat. Earnings per share of 67 cents came in well ahead of the 48 cents anticipated. Following that quarterly report, a handful of Wall Street analysts did reiterate their price targets, including one from Citi who raised theirs. The analyst said that they continue to favor the company's low-risk business model, and they are one of 6 current analysts that have a rating on the Viper Energy stock, coming in with unanimous buys. The average price target of $36.17 would only be an upside of about 1% though. Looking down below at our detailed ratings, we can see on the high end we have our recent rating from Citi with an upside of 12%, and on the low end a buy rating from about a month ago, which the stock has already surpassed, so it's now a downside of 10%. And our second energy company is Diamondback. This oil and natural gas company trades under the ticker FANG and is priced at $177 per share. Over the past year, they've seen growth of 29.5% and have grown 15% in the last 3 months. And just like Viper Energy, Diamondback also has an ex-dividend date next week on March 4th. Their currently quarterly dividend of $3.08 would be a dividend yield of 4.52%. Their current payout ratio sits around 44%, and their payment date is also on March 12th. This does follow their Q4 earnings report that came out on February 20th with an earnings beat at $4.74 per share. The company also reported strong free cash flow for the quarter, and this caught the eye of one analyst from Siebert Williams Shank. They noted that the combination of lower than expected capital expenses, a strong production outlook, and the strategic acquisition of Endeavor suggest a promising future for Diamondback. Altogether, the Diamondback stock has attracted 20 current analyst ratings, coming in as a strong buy with 17 buys and 3 holds. And the average price target of $190 would be an upside potential of just over 7%. Looking at our most recent ratings here from the past month, on the low end, we do actually have a buy rating, but with a downside of 13%. And on the high end, we have one price target here at 25%. Third on our list, we're moving away from the energy sector and more to the finance sector with Blackrock. They are a global investment manager that trades under the ticker BLK, currently priced at $812 per share. They've seen growth of 9.4% over the last 3 months and have grown nearly 23% in the past year. Blackrock does have a solid track record of increasing their dividend. Right now, they've been increasing it for about 15 years straight. Their current quarterly dividend comes in at $5.10 per share for a dividend yield of 2.46% and a payout ratio sitting just shy of 53%. Their next ex-dividend date is next week on March 6th for a payment date on March 22nd. Their latest earnings report for their Q4 did come out January 12th, where they had a solid earnings beat at $9.66, well ahead of the $8.88 anticipated. And following that, one analyst from Morgan Stanley increased their price target to $1,000 and reiterated the stock as one of their top picks, saying that Blackrock's breadth of capabilities and top brand uniquely position the firm to capture key growth zones over the next several years. Blackrock's current strong buy rating is based on 13 buys and 2 holds. with an average price target of $901.73 for an upside potential of about 11%. Looking at our ratings down below, we do have one hold rating as our low-end price target with a downside of 9.6% and a high-end price target from Bank of America with an upside of 26%. Fourth up, we're now moving over to the mining industry with Rio Tinto. Their company engages in the exploration, mining, and processing of mineral resources in over 35 countries. The stock trades under the ticker RIO and is currently priced just above $64 per share. They've had some ups and downs this past year and overall are down 6.4% and about 7% in the last 3 months. And those declines are in relation to their quarterly earnings report, as they have missed expectations a few times. In their most recent Q1 report, their revenue did fall slightly short of expectations, while their earnings per share came right in line, but you can see the couple quarters before that there were some misses. Now, Rio Tinto is a bit different than the standard dividend-paying company, as they pay their dividend out on a semi-annual basis, so just twice per year. And that next dividend payment will be on April 18th with an ex-dividend date of March 7th. The current dividend amount is $2.58 per share for a yield of $6.12. The company has a payout ratio of 61%. Despite missing some earnings expectations, one analyst at Argus did increase their price target. They noted that Rio Tinto has traditionally performed well during difficult economic times and in its views has strong long-term growth opportunities. The stock does just currently have 3 analyst ratings, but they do all come in with a buy. The average price target comes in at $79.50 for an upside potential of 24%, and you can see our most recent ratings here, all around the same range from 23 to 24%. For our 5th dividend stock, we are going north of the border to a Canadian-based company with Rogers Communications. The wireless communications company trades under the ticker RCI and is priced at $44.40 per share. Again, another company with some ups and downs the past year, overall down 3.5%, but they have been climbing back, gaining nearly 6% in the last 3 months. Rogers announced their next quarterly dividend following an earnings beat at the start of February. And their ex-dividend date will be on March 8th for payment on April 3rd. That'll be for their quarterly dividend of 37 cents per share for a dividend yield of 3.26%, and they have a healthy payout ratio at 43%. At the start of the month, they reported their 4th quarter earnings, which did beat expectations by 5 cents per share. Rogers Communications has 10 current analyst ratings, all coming in with unanimous buys. The average price target comes in at $57.71 per share for an upside potential of nearly 30%. Looking at our list down below, all of our recent ratings are in the double-digit upside here. On the low end, we have one at 17% upside and the high end at 46%. And last but not least, our 6th dividend stock for March is Camping World Holdings. The RV retailer trades under the ticker CWH and is currently priced at $26.65 per share. Their stock has grown over 23% in the last 3 months and up about 26% overall in the last year. Now, Camping World did make a drastic cut to their dividend last summer, and that can be cause for concern often. But they did have good reason, as the company is investing more money back into their growth. They've made agreements to acquire about 30 new RV dealerships in the coming years. And with a current dividend yield of nearly 6%, they still pay a pretty attractive dividend, currently at 13 cents per share. Their ex-dividend date is on March 13th for payment on March 29th. They did report their latest quarter last week on the 21st, where they did come out with a narrower than expected loss, posting a Q4 loss per share of 47 cents versus the 53 cents anticipated. And following that, we did have an analyst from Citi who increased their price target, saying that new units have turned nicely positive for the company over the past 90 days, and that the firm has seen enough positive indicators to give it confidence that Camping World story is very much on track. This is another stock that comes in with a unanimous strong buy based on 8 current ratings. And the average price target of over $30 per share would be an upside potential of about 15%. Down below, we can see all the recent buy ratings ranging from an upside of 5% to a high end of 31%. So that is a quick look at 6 strong buy dividend stocks, all with ex-dividend dates coming up in the month of March. Let me know what you think about these companies in the comments down below and what other dividend stocks you're excited about. I know there's a lot of great options out there. Please keep in mind that these videos are never a suggestion to buy or sell any specific stock, so please make sure you do your own research and due diligence. Thanks so much for watching. Have a great day, and I'll see you back here next time.